Economist Report, the 7th of May, 2025, right? So what's in store for today? Today, I want to talk about the US-China tariff negotiations. It's a crucial juncture for global markets. So an update on the current situation that we are facing right now. The trade conflict between the United States and China remains tense, but subtle signs suggest both sides are moving cautiously towards potential negotiations. Now, the US Treasury Secretary Bessent recently stated that tariffs at current levels, which is 145% on Chinese goods and 125% on US goods by China, are unsustainable and likened them to an embargo. Although he stopped short of confirming that formal talks are underway, he expressed confidence that substantial progress could be made in the coming weeks. President Trump has been more vocal, claiming that China wants to make a deal and that discussions are already in progress. China, however, denies that negotiations are taking place and has conditioned any talks on the US first reducing its tariffs. Now, despite this sharp rhetoric, both sides have made subtle gesture of flexibility at the current moment. China has offered minor tariff exemptions on select US goods, and Trump has indicated he's open to lowering tariffs if China comes to the table. Now, this back and forth signals that neither side views the current tariff standoffs as sustainable, and there is motivation to eventually resolve this dispute, which is most important. Now, why is that so? Why China matters to the US and the global economy? Now, the Chinese economy plays a critical role not only for the US, but also global trade and growth. China is one of the largest export destinations for US companies, purchasing a wide range of goods, including aircrafts, agricultural products, and industrial equipments. Now, losing access to this market could significantly hurt American exporters and lead to job losses in key sectors. China is also the world's largest exporter and heavily integrated into global supply chains. Many products consumed in the US, from electronics to apparels, rely on Chinese manufacturing either partially or entirely. And it's going to really cost a lot to shift this manufacturing out from China into other countries, and it also takes time. It's not something that can happen overnight. So tariff raise the cost of these goods while ultimately get passed on to the US consumers. Furthermore, China has been a major driver of global commodity demand as well. So if its economy slows as a result of trade tensions, countries from Australia to Germany would feel the impact through reduced exports. So, thus, any prolonged disruption in the US-China trade flows has consequences that ripple across the global economy. It raises supply chain bottlenecks, higher consumer prices worldwide, and weaker global growth. Okay, so like right now, I think it's also crucial to know what happens if talks succeed or fail. Now, if negotiations are successful, the two sides would likely agree to reduce tariffs and ease tensions. This would boost global trade and restore business confidence. Okay. Financial markets would likely respond positively, as we have already seen strong rallies simply on hopes of a deal recently. We've seen the market start moving up because of all these comments by Bessent and Trump, saying that positive stocks are on the way, and this already we have seen market respond positively. It's been moving up. Imagine if we get the real deal, saying that all is done. So it's a different thing, right? So we will definitely see much more concrete movement than we're seeing right now. So a preliminary agreement could focus on halting tariff escalations and addressing key issues like intellectual property and trade balances, leaving room for further discussions on more contentious topics later. Now, if talks fail, however, the consequences could be severe, Existing tariffs already at extreme levels may remain or even increase further. For China, I don't think they're going to increase, but for US, for the sake of it, anything can happen. This would choke off much of the bilateral trade, raise prices on a wide range of goods, and hurt companies reliant on cross-border supply chains. Now, American manufacturers and retailers have already warned that continued tariffs will lead to price hikes and supply disruptions. Economists also warn that an extended trade war could tip the US into mild recession. Meanwhile, China would face export declines and slower economic growth, which would weigh on global demand and investor confidence, especially in the short term. Now, we are seeing that China is trying to improve its, its businesses and talking with various countries to see how they could actually increase their exports to other countries except from US to reduce the reliance and also the impact, especially in the future. You can never know what could happen next. In a failure scenario, other nations would also be forced to adjust their trade and investment strategies as well. Now, the world could see more fragmentation in global trade, where countries are pressured to align with one bloc or another to avoid tariffs. In short, a breakdown in talks could have global consequences far beyond just US and China. Okay? So having said that, is the US stock market bull move dependent only on China? While the recent strength in US stock is closely tied to the hopes of progress in US-China talks, it is not only the factor investors are watching. The Trump administration has initiated tariff disputes or renegotiations with other key trading partners, including Europe, Japan, India, China, and Mexico. Progress in these areas is equally important to ensure that stock market gains are sustainable. So, for example, tensions with the European Union remain unresolved, and new tariffs or retaliatory measures could quickly unsettle markets. Likewise, talks with Japan and India are ongoing, and any setbacks there could reduce investors' confidence. The late April rebound in equities reflect growing optimism that trade tensions across multiple fronts will ease. If negotiations with China succeed, but disputes with Europe or other partners escalate, the stock market rally could falter. Therefore, for the full bull market to continue, investors likely need reassurance not only from China, but also from other major relationships. A comprehensive de-escalation of global trade tensions will be necessary to sustain market momentum. Okay? So what's the probability of success in the negotiations? Given the current signals from both sides, the probability of reaching at least a preliminary agreement appears moderately high. Okay? That is actually referring to China, since this is the topic we will be discussing today. Now, analysts suggest that there's around 60 to 70% chance that the US and China will strike a deal to at least halt further tariff escalations and possibly reduce some existing tariffs. Both sides have shown signs they do not wish to prolong trade war indefinitely. Trump has suggested tariffs would be down in a deal, and China has signaled openness to talks if the US reduces pressures. So while political considerations on both sides could delay or complicate negotiations, the economic cost of failure provide a strong incentive to find common ground. Still, a meaningful risk remains that talks could stall or collapse. We cannot just expect everything is fine and dandy. Posturing and domestic politics could prevent a quick resolution from both sides. Okay? So end of day, timeline, the next 2 months are critical. The US has paused further tariff hikes on countries other than China until around July 8, 2025. So mark this date down on your calendar. The 90-day truce was announced on 9 April and gives negotiators a window to resolve the disputes. By late June or early July, market expects significant progress or at least a framework agreement to be reached. Okay, so by early June, if we don't see that, late June, sorry, if we don't see any resolutions, do expect market to start coming down again. Okay, if there is, that's good. Okay, so I'm giving you all late June. The upcoming G7 summit in late June presents a likely venue for any major announcements. Probably you'll be seeing the US-Japan resolution first, and followed by the rest. So if talks with China and other trade partners go well, the US could agree to extend or make permanent the tariff pause. Okay. So, however, if negotiations fail to progress by 8 July, okay, the US could allow tariffs to truce to expire and escalate tariffs further. This would likely trigger immediate retaliation and significant increase trade tensions once again. So as of 7th May, which is today, roughly 63 days remain before this informal deadline, making the coming weeks vital for shaping the next phase of global trade tensions. Okay, so get this date down. They are very important and we shall monitor it. With that, that's the report for today.